Let's dive into a pivotal week in the markets, July 28 through August 1st, where investor sentiment swung dramatically from risk-on optimism to heightened fear. July 28 kicked off with U.S. stocks surging on news of a U.S.-EU trade deal, immediately easing fears of escalating trade wars and setting a positive tone for the week. The Nasdaq hit its 14th record high in July, while the S&P 500 extended an impressive 6-day winning streak, according to the Wall Street Journal. J.P. Morgan noted that improved clarity around fiscal and trade policies, including key legislation extensions, boosted investor confidence significantly. This fostered what analysts called a Goldilocks narrative, the perfect combination of moderate inflation, fiscal stimulus, and AI-driven growth prospects. Interestingly, Morgan Stanley observed that despite strong momentum, sentiment measures like AAII ratios and hedge fund positioning remained surprisingly muted, reflecting measured optimism rather than euphoria. But sentiment shifted sharply as we moved into the final days of July and early August. The August 1st U.S. jobs report delivered a crushing blow, showing only 73,000 new jobs in July, well below expectations according to Schwab.com. Unemployment jumped to 4.2%, made worse by downward revisions of prior month's data, painting an increasingly troubling employment picture. Adding fuel to the fire, President Trump announced new tariffs on multiple countries, causing the effective U.S. tariff rate to surge to nearly 20%, as reported by Seeking Alpha. This triggered a scramble for safety, with the VIX volatility index spiking above 20, a clear signal of rising market fear. Investors increasingly fled equities for bonds, sending Treasury yields tumbling, a textbook sign of rising risk aversion, noted The Guardian. Analysts reported the worst weekly losses in months across major indices, marking a stark reversal from the previous week's optimism. While big tech earnings showed some resilience, particularly AI-related names according to Reuters and Business Insider, it wasn't enough to offset broader concerns. The broader risk-off tone reflected deep investor anxiety over deteriorating macro conditions, capping off one of the most volatile sentiment swings in recent memory. Don't forget to comment, like, share and subscribe.